And I think you can see comments, and I think you can also put stuff up on the screen. I'm not exactly sure how to tell, but can you see any comments?
Ready to connect.
Okay, here's Chris. Let's get him up there. There's Chris. Awesome. All right, we're live, and I'm going to keep it short to introduce. We've got Chris LaQuassier, who is the strategic officer at Collective Audience, and we've got Bret Suen, CEO of Collective Audience. He can tell you his background better than I, but he started in the business at Bear Stearns 1987. So he's got decades of experience. Time is short. I'm going to just turn it over to you, Bret.
Oh, terrific. Thanks, Bill. First of all, thanks for having me on. Did you?
I'd love to show one thing before you start.
Please.
Do you see this chart?
Ready to connect.
Can you guys see it?
I can, yes.
Maybe you can talk about that.
It looks like a ski slope that one may not want to try out if one's a beginner.
The highlight that I see is for months it traded at $11 a share, and then all of a sudden, as soon as the de-SPAC occurred, look what happened. But that's the opportunity too. Anyway, I can remove that, and you can get going, and we can always go back to it. Where's Chris? Oh,
I think we lost him. Sure. Okay. Do we have someone? Do we have Busy logging in to ask some questions?
Busy is using this live,
not found,
and he's hooked up Space, so the sound is coming through his computer rather than mine, and he's running the Space call, and it'll be recorded, but it'll be through Busy Brands rather than through my name.
Oh, super.
On Twitter.
Okay, wonderful. All right, so yeah, thanks for having me on. We are now officially on NASDAQ. Well, at least our core business, which we've called Data Logic for years now. The SPAC that we went into, Aubrey, had a valuation of us at 114 million. That's what we cleared the Securities and Exchange Commission comments on, which was an extremely lengthy process. We started in July of last year, so it took us 18 months to get through the process. I can't say that I'd like to go through it again, but certainly the ending result of being on NASDAQ has been achieved. And although I say it's the ending result for at least me and my team, and I think people who we've met with and been down the road with for years now, this represents a beginning, not an ending by any stretch. I think shareholders of Logic have been very supportive, and unfortunately, the share price has come down from a high of I think it was 38, but when we halted trading, I think it was 27. Opened, I think, at 8 or 9, and proceeded to trade down to 2 and lower. Unfortunate. However, I think opportunistically for anyone joining in now or looking to average down, I would point out that I bought a position in the open market a few weeks ago. I bought around 200,000 shares at an average price of 205. It seemed to me just very, very simplistically that to go from $2 to $20 is a heck of a lot easier than going from 20 to 200. And probably at this valuation is quite compelling. And so I put my money where my mouth is. in any case, just to address the cap structure, I know that's been discussed at great length. We have 13.5 million shares issued and outstanding, roughly. We've got about 3.8 million in the float. We've got a relatively low market cap right now, certainly compared to what we've been historically. I think looking at some of the opportunities going forward, it's quite exciting. We've spoken in the past, Bill, about mergers and acquisitions. For the better part of this 18-month process to get through the de-SPAC, we've had significant conversations and been down the road with some quite exciting merger targets, strategic partners, a number of potential customers. And I think where we are now represents a great opportunity for investors, at least to just getting back to where Aubrey was trading, for a year and a half. Getting back to 11, I think is probably quite achievable. I don't think I'm supposed to say that, but in any case, I think it's quite possible, primarily because the things that we're looking at from an accretive acquisition perspective, customer acquisition, strategic partnerships. And then if you look at us as a starting point now, a few weeks ago, we announced that Elizabeth DeMars joined us as a board member. She's actually, thank you. Yeah. Elizabeth is, in fact, chairperson of our board now. She was number 3 at Bloomberg for many years. She has been chief executive officer at thestreet.com, creditcards.com, a number of other highly esteemed companies have counted her as an executive or a board director, and she's very, very active and hands-on. I think what you're going to see, and certainly, as we've indicated in the past, now that we're a NASDAQ, we need to have both board and management that has skill sets and industry tenure in ad tech. I've mentioned before that I'm not particularly fond of leading a company in an industry that I don't have a deep background in. I think that making that statement and bringing someone else or some other people in as executives to lead us forward is something that shareholders will see. I've met a tremendous number of people in the ad tech industry just in the past 6 months as we've headed towards our de-SPAC, who, when I have conversations with industry analysts or investment bankers or just very savvy investors in general, who typically look at much larger companies in the ad tech industry, when I mention these names of who we're talking to about board positions, executive roles, strategic advisors, it's amazing to hear how well known these people are in the industry. But I think in terms of are they household names? No, but I think in the industry, yes. And once you start to bring those on, you start to command a lot of attention in the industry. People really want to see what you're doing. What are you going to do next? What direction are you headed? How's your business going to ramp up with these people? Why did they join? If they've joined because they want to make a difference and bring in other partnerships or customers or acquisitions that are accretive, that could end up scaling to a much higher market cap. I think that's really something to pay attention to. So anything news related along those lines, I think we should be cheered by investors.
So just quickly to go back to the outstanding float, I got my numbers from OTCmarkets.com. So I'm glad you clarified it. But you said there's 13 million shares outstanding, 3.8 in the float. How
Correct.
much of that 3.8 would you consider closely held, and those people are not selling it, not lending it out?
Probably about 65, 70% our team and some of our key shareholders who have been with us for years have bought shares recently. A friend of one of our directors over at Logic, Peter Bordas. Pete has a friend who I'm pretty sure owns right under 5% of the outstanding. I had a call with him last week and thanked him for his support. And I asked him, I said, are you planning on increasing that? Because you'll have to file a 13D. And he said, I'm not opposed to it. So, I really appreciate the support. And of course, I think with such a small float and certainly such a large percentage closely held, I think it leaves plenty of room for upside. And when I say that, I'm not, obviously I want the share price to go up. I can't do anything with my position because I've got a 2-year lockup on my core holding in what I bought in the open market. I filed a Form 4 and we have an internal lockup as well, even on shares in the open market. But if we see price performance back to the call it $5-6 level, certainly headed up to $10, $12, those are important points because those are levels that we would be taken very seriously for some of the strategic acquisitions we've been looking at that are relatively high revenue companies. They're profitable. They've been waiting for us to get to NASDAQ before really digging in and discussing how we could have them as part of this. So, a higher share price absolutely dictates greater success because of what we could layer in. And what we're seeing are still very low valuations of privately held companies that are profitable. And I think going into the public markets, both now and then going forward, you'll see an uptick in valuation.
So just because I'm trying to set up the opportunity perhaps for trouble from the shorts. I don't know if the shorts are real or counterfeit, whatever, but somebody sold a lot of stock over the last few weeks that doesn't appear to exist or isn't in the float. So if you use 35% of that 3.8 million, it's about $1.3 million maybe is tradable. I don't know what you think they collectively sold over the last few weeks. It looks like 25-30 million shares. So is that a setup? And do you have a strategy perhaps of catching the shorts out?
I can say that
if you can talk about it.
Sure. I'm not focused around it. I would love for it to happen. I think, earlier this year, I've been on your show, and I can readily say I've been pretty angry for the past 18 months. Mostly the lengthy process that we've gone through with the Securities and Exchange Commission to de-SPAC.
Right.
They're supposed to be out protecting investors, but the nature of their comments along the way was just baffling at best. It doesn't seem like a real way to get companies into the marketplace. We've already been public anyway. That notwithstanding, I think it's led to a scenario where being down at $1.60, $2 level, it is interesting, Bill. The day that we opened for trading, we traded a fair number of shares. Then over the next week, we certainly did, and trying to figure out where all that selling comes from when really, only 3.8 million's in the float. It was kind of baffling. So I pulled some of the time and sales from NASDAQ. We've had conversations with some people who are quite active traders. I've learned a lot recently about high volume days on low float stocks, and certainly with ours. I'm pretty sure there's a decent sized short position right now, but I think more importantly, valuation for us and and trading back up at least to where we started, I think is certainly doable. If that's due to a short squeeze, that's great. I don't care how we get there as long as we get there, and I think we will. I think when shareholders start to see some of the things that we have lined up, and when we start talking about them, it will both generate more interest and certainly put us in a position where people are paying attention.
I assume this quarter reporting is not going to be all that exciting just because of getting the merger done. But looking at next year, let's talk about the valuation. Two questions. One goes backwards. In the SEC filings, it says that Logic did a third-party review, or maybe it was Aubrey SPAC, of the value of Data Logic, which is essentially what CAUD is now. And I think it came up with a number higher than 114 million, but you set the sale price at 114. So anyway, maybe you can talk about that valuation, the 114 million. And then secondly, I guess it's two parts. I remember that you were looking at 70 million annualized revenue run rate exiting this year with a target of 100 million next year or more. But that's before these 3 or 4 companies you were considering rolling into what's now Collective Audience. Are those deals still going forward? How much revenue would it add? Is that where valuation is going to come next year?
I can't be specific. I can say that some of the things I've learned recently, especially by being on the board and seeing the levels of corporate governance and compliance around that, it's vastly different than OTC markets. So I have to be careful about what I say. Generally speaking, though, and we have indicated publicly a number of times that there are accretive acquisitions out there, and the size of some of these. I mean, some of these companies are right under 400 million in revenues. They're profitable. They're privately held. There's a couple that trade on foreign exchanges. Their valuations are not what they would be if they traded in the U.S. Getting to those numbers through acquisitions would not be difficult. I think most importantly, the organic growth would be something that investors would want to see as well. I can say that this length of time that it took to de-SPAC caused us to reevaluate some of the customer relationships we've had. One thing that we don't want to do in the ad tech industry is have low margin business. I think that historically we've always been down around the 15-20%. We've gotten up to the mid 20s at times, but I think what investors really want to see are gross margins, roughly 30-40% minimum, and then profitability within reach. I think we can get there exiting the year with proper customer acquisition, and certainly any type of strategic acquisitions we bring in will make a huge difference as well.
That was interesting. Do you think everyone understands what you do, what ad tech and martech is, and that you're targeting 50% of the opportunity that isn't servicing companies like Amazon and Walmart and the rest? I don't know if you have a quick blurb on that.
Yeah, I do. Ad tech's a bit arcane in terms of some of the terms and jargon used within. Certainly I hear buzzwords all the time that I have to go look up, even though I'm in the industry. But very simply, we do digital marketing and digital advertising for companies that sell things online and offline. So ad tech, martech is where we are. There's a huge percentage of companies that are small and medium-sized businesses that have a hard time competing because most of the advertising space is bought up by the bigger players like Amazon, Walmart, eBay, etc. So yeah, I think it's probably a little difficult for people to grasp what we do. But I can say to simplify it, it's a huge market to aggregate. If you're focused around small and medium-sized businesses, you don't have to service Amazon or eBay or Target or Walmart to do quite well.
In terms of your, I don't know, financing, I was going to try to ask it in a softer way, but do you have plans to raise money in more of a plain vanilla way to sort of get through to the time when you make some of these acquisitions? And are you allowed to talk about it if you are working on it?
Sure. Okay. I'll leave out the part about the funding that we raised for the de-SPAC. Well, actually, I will address that because I think people are wondering, because my team certainly has asked, and so have key shareholders. The closing costs to go through the SPAC were predominantly from the Aubrey side, even dating back to when they IPO'd, and so it ate up almost all of the funding that we raised. Unfortunately, that's been a real sore spot, but I'll leave that alone because that's not important to investors right now. We do need to do a financing, although not a significant amount. I think if we raised, call it 5 to 10 million over the next year, that's probably adequate. That's not what investment bankers want to hear. They want to hear you say, "Oh, we need to go raise 50 million over a year's time." All the acquisitions we're looking at are all share related, so we would like a higher share price to acquire them, and they'll be accretive regardless of what price we do it at. But ideally, I'd like to see us at a higher market cap before launching.
But you're not going to do any financings that are dilutive or help the shorts out?
No. I mean, we went through that with Logic.
Yeah.
This year, I and two others, friends of mine, bought out Ionic, who we did a financing with in March of 2022. I can say that the PIPE investors that we raised pre-SPAC money from, they're two hedge funds. I mean, they weren't their usual investment strategy is not toxic. They're not these guys like Lind or L1 or Armistice or some of these other ones who say, "Oh, we're a single family office and industry agnostic." I mean, that's just bullshit. Sorry. Yeah. Anyway, I'm sorry. We are not talking to those types. We're talking to individuals who are former ad tech executives who've done very well. We're in our now professional investors. We're talking to strategic investors who were early stage investors in some of the higher market cap ad tech and martech companies. So that's what we're looking. So down here at these prices, I wouldn't like to raise a lot. It is necessary to raise a little bit, but again,
I don't know the feasibility of it, but there may be people listening that would be interested. But that's for a topic,
My number and email seems to be out there in the public domain. So if anyone is, please email me. I've gotten a lot of emails recently. But,
so
look, this is exciting. We're on NASDAQ now. For me, that's been an 11-year journey, and I'm not done. It's a fantastic starting point. However, I think in order to do it right, we need a couple of folks coming in on the executive side who know what they're doing, who know what trends are underway, where we can go, what we can bring in on the customer side and acquisition and strategic side to really build something of scale and high value.
I'm going to mix good with bad here, but you know that the shorts desire to drive these prices down, even on NASDAQ, to cause it to go under $1. So you have to do a reverse split, or if they can drive it down, it busts up any deals you have or any acquisitions you have. So that's the negative part of the question. The positive part of the question is, I assume with the tremendous board you have, with your own experience, and the IPO market being somewhat almost dead, you were seeing cream of the crop deals that you are able to bring into this, making the whole bigger than, and I won't use the word synergy, but making the whole bigger than what it is now. So if people can look beyond the low share price now, you could create a high share price just by getting all these guys and girls together.
Absolutely.
That wasn't a very good question. That's the answer. All right.
Yeah, it is. I'm not going to say easy, but it's more readily done now that we're on a senior exchange. It's always been a goal, personal goal of mine, certainly my team's. But I think the level of seriousness that people take when you're on a senior exchange and you're talking to them about merging their business in is very different. I think if some of these predatory short sellers feel like they want to gang up on us and try to crush the ability to do a transaction, it happens. I think to the good is that now that we are on a senior exchange, it's very different in terms of the type of tailwinds that we could gain with individual investors really being supportive. If you look at some of the meme stocks that have ended up doing very well because the individual investors drove their share prices higher, pressured short sellers to in turn drive the share price up higher. Once you get to that point, what you can do with it, I think, is tremendous. I think making acquisitions and turning into a multi-billion-dollar company is absolutely doable.
On that, if let's say the stock were to get back to anywhere from 7 to 20, 7.5 to 25, I don't know, you have enough matter to add in that it can stay there. Are institutions interested? What's the metric against revenues? What's your target, say 18 months, 2.5 years from now?
That's tough. I don't think I'm supposed to say what it is, but look, I didn't have to buy shares in the market, but I did because I think it's a fantastic price too. I almost bought them at 5, but I got busy and I just missed it.
You could have bought them at 1.5.
Yeah. Anyway, okay, I'll put it very simply. If what we're looking at right now on the acquisition side,
yes,
we could build a multi-billion-dollar company that would be competitive to a trade desk or I should forget the name. Magnite.
What's the other one? Sorry, I interrupted.
Magnite.
Okay.
Trade desk. Yeah, I mean, there is so much available that is privately held that now that we're on NASDAQ, just the level of discussions are very different. I think the key to that, though, is you have to bring in someone to lead that initiative who can sit down with other ad tech folks and have shared histories and experiences that Yeah, and I think the minute you see that happen on the executive side in additional board, it'll be a real strong signal that we're here to stay and we're here to compete. And so again, building up to a multi-billion-dollar revenue and market cap company is very achievable. I think you just have to have the right people do it.
What happened to Trade Desk from inception to big numbers? How long did it take, and did it just kind of get viral at one point?
Wow, you'd have to.
I know it took about 10 years, right?
Yeah, I mean they've been around for a while. They're sort of the bully on the block for ad tech. There's some other ones in their sector that are 5, 10, $20 billion market caps. I'm just looking it up now. Wow, they've got a $35 billion market cap. Okay, so it looks like they went public back in before 2017. Yeah, around 2016. Yeah. But there's, look, there's a number of others. There are privately held companies that are $1 billion in revenue that are in the same sector. They would, I think what we've seen over the past 18 months is their ability to go public hasn't really changed significantly. The IPO market hasn't been robust, but it's picked up again. So I think, to the good, what we need to see is stronger discussions and finalization to acquisition talks that get them to a point where when there is a robust IPO market, they're already public and we would be trading up as opposed to coming out then.
Okay, I'm going to ask one more question, then we'll see if either Busy has questions or there's some here. But this one, you may not be able to answer. But you introduced Univest to finger motion, and most of this audience is very familiar now with Univest. Do you think it's possible that Univest would be there to help you with what we used to call roll-ups, bringing in other companies, or financing, or anything else? And if you can't talk about it, at least I asked you.
No, I appreciate that. I know the folks over at Finger Motion very well. I know their founders, and I knew them when I was in Asia. And I like what they're doing. I think they've got a huge opportunity for expanding outside of China. And I like the folks over at Univest. Their founder, CEO, Edric. He's awesome. He knows what he's doing. A guy named Brad, won't say his last name, but he runs their New York office. Very capable. They've got a great team. And I like them. I think also the fact that we've got a broad shareholder base from Asia helps. I think ad tech in Asia on the M&A side is ripe. So, yeah, I like them a lot. Also, the fact that we've got a broad shareholder base from Asia helps.
You can hear it.
I think ad tech in Asia.
All right, so let me.
M&A side is ripe.
So we'll get questions here with Busy.
Okay.
And then there's a little bit of a lag. Okay.
And then there's a little bit of a lag.
There you are.
I hate my voice.
I hate my voice too.
All right, Busy, how do I do this without the lag and the delay? Hey.
Okay. What I'm going to do is, if anybody has questions, I'm sorry, William was trying to do this live on his YouTube live, and also he was going to share it through his profile. But let's listen, guys, if anybody has any questions for Mr. Bret Suen, please take a mic, and then, you know, you could go ahead and have William ask Brent. I know that Brent is listening, so please take a mic. I have one here. Give me a second. So we're going to go with Arbitrage Trading Desk. Go ahead, Arbitrage. Arbitrage, you could go ahead on mute. Go ahead. Ask your question.
Sorry, I just unmuted. Okay, so my question is, I own several thousand shares. I don't think I'm satisfied with the answer of the stock, and not in a negative way, in a positive way. Maybe you can elaborate on this. I mean, let's call it for what it is. The stock went from $30 to $2.
Mm-hmm.
You're telling me that there's a $3 million float with 65% mostly tied up, unlent. Where's all the selling coming from?
Well,
You have to mute yourself.
I wish I knew that answer. It's certainly not from. It's certainly not from insiders or team. You know, we're locked up. You know, I can say that. You know, I followed some of these short selling sites that you know, pull data from trading and, you know, the Reg SHO. I think the flaw with that is, in fact, you know, even the creator of the algorithm himself, he said that what you can't do is you can't aggregate the daily numbers. You can't say, okay, this many shares were sold under Reg SHO this day, and then you add the next day and next day. You know, if you have a cumulative number, it starts to look a little ridiculous. And the two things that it doesn't calculate are intraday buys to offset those sells, or someone who is long, who has an account that clears through. So actually offshore. So people who live in Asia, for example, or Europe, their accounts are local, right, at their bank, and then their bank will trade through a U.S. counterpart who then uses a market maker. So technically they own the shares, but when they're sold at that broker, they're not long those shares at that broker they sold them to, but on settlement date, it pairs off. So, you know, those are the things that are not calculated in short selling numbers. You know, also intraday trading, there's a significant amount of buy and sell offsets. When I've looked at the NASDAQ time and sales, which I don't recommend anyone do because there's thousands of them, you'll see that, you know, they're predominantly smaller orders, 100, 200, 300 shares at a time. And so I think that those are predominantly computer generated trading programs. So, you know, selling and then buying back, you know, a couple of pennies lower. You can pressure a stock down enough to make money, you know, intraday if you're trading hundreds of thousands of shares and just trying to arb a couple of cents. You do that with hundreds of stocks every day. So, you know, I hope that answered your question. I mean, I don't know if there's a specific seller or sellers, but, you know, I know who it's not.
Was that your question? Do you have a follow-up, Graham?
No, I don't. That really didn't answer my question. So you're saying it's an algorithm that we're fighting, and it's not people, it's not criminals, it's an algorithm that will continue to short this stock until what? I mean, you realize it's not like it was shorted from 32 to 29. I mean, we broke $2. Is this an algorithm that's just going to continue to supply shares for every share that's trying to get bought on the open market?
It's not just one. I mean, most trading desks nowadays have at least some form of computerized trading that they layer in, and then there are some that are 100% computer driven. In fact, everyone knows Amazon, but not everyone knows that Jeff Bezos Before he started Amazon, he worked at a firm. Geez, it's escaping me. Sorry. Hang on. D.E. Shaw. Sorry, they were actually a client of ours when I was at Bear Stearns. D.E. Shaw is a computerized trading firm. There's dozens of them. Susquehanna. There's tons of them. And what do they do? Well, they have algorithms that will sell stocks and buy stocks based on liquidity and other factors that take into account technical history, the number of retail versus institutional, and they can trade against trends and basically bully the price down. We saw that happen when we did an IPO on the NEO a couple of years ago. That was a disaster. But the banker put the shares in the hands of 6 groups that just bullied the share price down. Every time it would run, they would layer in these huge offers, and then they'd hit every bid. So it becomes a self-fulfilling prophecy. But you can do that electronically. But the good part of that is you can also do it on the buy side, but you have to see triggers hit on the upside. And that's why you see stocks go parabolic and they trade up, 3, 4, 5x. Last week there were 2. I'm sure there were more than that, but the 2 that I was shown went up 800% in a day. It's because there was both a huge short position that got squeezed, and then individual investors turned the tables on shorts, and then also these algorithms went the other way and drove the price up alongside real buyers. Sorry, that was kind of a long answer, but does that answer your question?
Albatross, you were getting feedback, so I had to mute you. Go ahead, unmute yourself.
How about now?
Yeah, we can hear you. Go ahead.
Yeah, I mean, it's not crystal clear. If there's no person behind all this selling, that we're fighting an algorithm, I don't know. It's pretty scary. It's almost like, you're on the board, you're a CEO, you have to do everything above board. You got to report everything you do. Your stock gets shorted from 32 to 2, and nobody has to report anything on how that happened. And it's still a little murky because there's no real clear and concise answer. We don't think it's a pack of wolves. But yet again, it's still, it's like a lot of murky algorithms. I mean, I don't know. It's unclear to me how this thing is set up. This whole system is set up that they could run your stock where all you have is good news in front of you, acquisition targets, going to the NASDAQ, coming out of the SPAC, and you're about to hit the ground running. And there's really no crystal clear answer on how the stock went from 32 to 2. That's my only point. But I appreciate it. Thanks, Busy.
No problem.
It's a good point. And I echo it.
Go ahead, Chris.
Hi, and I don't have a question for Brent. It's funny, I actually worked for Brent in a previous life. I was the head of investor relations for GoLogic. But what I want to do, I just want to add my 2 cents to arbitrage. I follow a lot of stocks. I don't know if folks follow me, and I work daily with the former head of the Amex. He was the securities frauds division investigator. So we work daily on multiple stocks that we watch and report on to ourselves and to different retail investors and different folks that come in to stocks. But what I believe is happening with Collective Audience, CAUD, is they see opportunities in these stocks and multiple firms come up against them. And I believe they're naked shorting against the stock, and they're naked shorting against the warrants. That there's an overhang on the stock. I believe, and if Brent could correct me, I believe there's a few outstanding warrants, about $2 million at the $11 strike. So different firms, in my opinion, have come. They see these notes, and I've spoken to Bill about this. that they'll just print these naked short shares and sell and sell and sell. And I believe they've been selling them down at the $2 range. Like when we just saw that little run over 2, I believe they just keep selling shares, and they don't have to cover them until the stock rises aggressively above that. And they don't have if they have a margin account that covers $4 up, they're still safe. But if that stock breaks 5, the prime broker is going to force them to buy in. So that's what I believe is happening with Collective Audience. It's funny. I follow Mullen aggressively. I'm invested in that stock also, but they have what's known as a toxic lending, and they have true-up shares, and they have a non-dilutive clause in the warrants. There's nothing like that with Collective Audience. So I think that the gentlemen that are shorting against Mullen, it's a big difference. The folks that are shorting against Collective Audience. If retail comes in, everybody buys a little bit. They see it as an undervalued investment, as I do. The stock gets up over a certain price, the prime brokers are going to buy in these folks that I believe are naked short against the warrants. So that's just my opinion. Thanks.
Oh, thanks for that, Chris. And you know, just to elaborate a little further on the comment we had prior to yours, I'm sorry, the question. You know, algorithms can come into play as well on the upside, and so to do that, you do have to hit certain technical levels. But you know, it's a bad thing, but it can be a good thing as well if you've got you know, if you've got the right triggers that are hit, and you've got a loyal following and people who want to be supportive and see you make constructive moves with a higher share price, because they end up getting rewarded as well. So anyway, thanks, Chris.
Yeah, no, you're exactly right, Brent. You mentioned that there's actual market makers that are only algorithm upsides. So there's a few of them on the market, and again, it's a computer generated buy program, and if the stock trades at a certain price, the computer just keeps up ticking on the buy, and they make money on the buy. They don't care what stock it is.
Yeah.
But there's a few market makers that specialize in that today. Over the past 3 years, those have become very attractive since GME, AMC. Interesting.
Yeah.
Okay, thank you, Chris. Thank you, Brent. Anybody else has a question from Mr. Suen? Please take a mic. If not, we'll go send it back to you, William.
Okay.
Anybody else? Go ahead, William. See if you have anything on your side.
All right. So I'm going to turn the mic off. Okay. I'm getting a bunch of questions. I'm just reading them over here about Go Logic. I don't know if you want to talk about that or Logic, but you don't have to. This is.
I'm just reading over here.
I'll turn that on. Anyway, if you want to talk about them, if not, we'll stick to Collective Audience for this video.
I think instead of addressing those directly, I'll reiterate what I said earlier about when you see news about additional executive hires, what that allows me to do is focus around Go Logic and certainly LGIQ. One thing that has happened recently, which is fantastic, is there's a number of very large privately held companies that want to go public, and the size of them is huge. So being able to use a publicly traded OTC listing and then uplist is very, very feasible for them. In fact, I've been approached by people who saw that it took us 18 months to get through a SPAC. Nobody wants to go through that process. You can be public into an OTC vehicle within, if you wanted to, you could do it within 30 days. If your PCAOB audited, you can be up and trading in no time. And if you've already got a pre-existing relationship with an investment bank and can go in and talk to NASDAQ or NYSE, you can be uplisted within 3-4 months. So all in 5 months, it's almost a guarantee of being public as opposed to what will the IPO market yield? Am I going to get through a SPAC? I mean, 18 months, I don't think I'd do it again. And I think that's probably what.
So in the case of Logic, these shorts, whoever they are, have been selling it, obviously, to get it down, whatever their reasons are. But if there's a company out there that wants to do a reverse merger and go public, basically,
yeah,
you've got clean financials, you're in great order, and it doesn't matter to them that the stock's a penny or if it's $1, because once they're in it, they're it.
Yes, and what does that mean for shareholders? Well,
yes,
in order to stay listed, even on OTC, you have to have a minimum of 10% float, non-affiliate. So anyone coming in would look at least a 10% retained interest to the current shareholders. So what would that look like? Okay, I mean, I've looked at a couple of transactions that would be 500, 600 million in size. That would indicate 50 to 60 million in retained value to shareholders. So when you merge them in, the implied value is 50 to 60 million to existing shareholders. I don't know what our current market cap is right this second, but I'm sure that those numbers are higher than where we are.
So you use 10%? Does it go as high as 15%, or is it?
It would. I would like to do that. I don't think it's out of the question because there's plenty of quality
for your show.
Yeah, plenty of quality reverse merger targets out there, and we've been having talks. So yeah,
if in that, because shareholders voted on it, if there's a reverse merger, and I assume you can do it fairly quickly.
Yes.
There might be a reverse split that goes with it, but would you wait till the merger happens to do that reverse split so that there's some weight and size in the company, in the
Yes.
shell that's now a real company?
Yes.
Yeah. Okay. I love your short answers to my long-winded questions.
I had a few long-winded answers earlier, so
one thing that we didn't talk about that was a bit of confusion: people received the CAUD shares, and it said in the press release that was something like 1 for 36, or I forget but what the press release didn't say, that's only 33% of what everybody got. Mm-hmm. And that in your documents, it says that extra part, the 0.66%, you're going to wait 11 months. I wish you do wait so that people can see what you put together. But what are your thoughts on that 11 months?
I think there's a lot of good things ahead of us. And, when we originally entered into the agreement with Aubrey SPAC 1, the valuation was based around $10 a share. So, they issued 11.4 million shares, of which Logic still owns 6 million shares. So getting back to the value represents over a 5x from here, and would certainly enable us to make strategic acquisitions, which would then warrant an even greater market cap. So, and I think that's a rather simplistic answer, but it's.
What's the 5x? Is it on Logic or on CAUD?
Well, it would be on CAUD if we just went back to what the valuation was on the SPAC, which was $10 a share. So we're at
I've shown this chart a few times, but the value was there for a year. Here it is, 12.5 in the middle of August, but it stayed at 10 to 11 forever until this onslaught came. So my point is, it should get back at least to that level, I would think.
Yeah, I think so.
Let me just see if there's any questions here.
I've got a call in 4 minutes.
Yeah, and I have one question I wanted to finish with.
Mhm.
As a CEO, how can you assure the public that the shares won't go to zero? Anyway, I have one question. What if a bunch of people start buying it? Institution, whales, and this small float, a million and a half. Could it trigger that algorithm to the upside that you were talking about?
I think so. Just purely on a personal level, I think the challenging area is that $2.05, $2.10 level. I'm not a very good chartist, but it seems like we tried to trade through that level the other day, and it was met.
Chart looks good, I think, for the upside. But
I think if we trade through there, we should trade back up 3, 4, 5, with little problem. I mean, just watching some of these other micro cap stocks that have gotten some tailwinds from individual investors, trading up nicely and seeing these algorithms kick in on the buy side. Yeah, it could happen. And look, you don't really need institutional interest to have an enviable market cap. I mean, you just look at some of the companies that are well known from Robinhood traders, or call them meme traders, or Wall Street bets traders. It's all retail, so you don't need a Fidelity or Putnam or Vanguard in there supporting you when you've got individual investors who number in the thousands and they care about what you're doing. So yeah.
Are you going to have news or events in December, Mike? The reason I'm asking that is maybe we can have you back once that happens. And
well, you'll either have me back or someone else.
All right. Well, Brent, it's been an hour, and I think it's been a great hour. I really appreciate it. I'll get this doing space and this. Busy did a great job, but I'm really excited about CAUD, and I think things can happen this year to make the stock price much higher. So that's how I see it.
I'm with you. I bought shares recently, so hope so.
You can finish it out if you have something left to say.
I appreciate you taking the time, Bill, and Busy. Thank you both. I appreciate some of the positive comments. I'm looking at the comment window here. It's nice to see that people are supportive and want to be constructive and not just bash you and give you a hard time. I can certainly take it, always have, but it's nice to see support. So thank you all. And good luck out there.
All right. Thank you very much, Brent. Thank you for taking the time.
Take care.
Cheers.